Good morning, it's Thursday the 13th of August. My name is Paul Durrans and I'm one of the investment directors here at True Potential, and I'll be bringing morning markets to you today. So over the past 24 hours, stock markets were very strong with good gains made at the index level across developed equity markets. The FTSE 100 was the standout performer, up at 2%. Helped by some positive specific company news. Japan closely followed the UK overnight, with the Nikkei 225 up 1.8%, with investors remaining focused on a continuation of a successful economic reopening. The US produced pleasing gains, up 1.4% yesterday, with the largest contributors coming from the technology and healthcare sectors, both that have been out of favour this week as investors have rotated towards stocks on lower valuation multiples. Europe was up 0.9%, so really pleasing numbers across the board. Silver and gold both were hit hard on Tuesday. Both were able to claw back some of their losses as investors decided the flight from precious metals driven by higher bond yields had gone too far. The US dollar weakness over the past 24 hours will have also been helpful to both metals. However, the dollar does remain stable against the pound. Currently, the pound is trading at $1.31 to the pound. Government bond yields continue to move upwards. The US 10-year government bond yield reached its highest level since June at 0.68%, a really rapid and noticeable climb over the past week, where the yield was at 0.51%. In the UK, the 10-year gilt yield also trended higher, which is now trading at 0.24%, up from 0.07% just a week ago. So it may seem small differences, but these are very noticeable trends and it is material. Part of the reason was that we had US inflation data this week. We had some released yesterday, which supported the data which was released on Tuesday, which was around the producer prices. Yesterday, the focus was on CPI data, which which is a measure of prices consumers pay for a basket of consumer goods and services. Both headline and core CPI inflation rose more than expected in July, with gradual reopenings progressing well, thereby allowing economic activity to normalise slowly. This is despite recent virus hotspots appearing in the Sunbelt areas of the US. Headline CPI came in at 0.6% in July, so no change over the month, but still higher than forecasted, which was 0.3%, with energy prices and auto costs being material contributors. Core CPI, which excludes volatile items such as energy and food prices, also increased by 0.6% from a month earlier, higher than the 0.2% forecasted, and the largest gain since 1991. So really it is material, but it's still some way off the 2% target level for inflation, which the Federal Reserve has. So what will I be looking out for today? Well, I'll be looking out for further improvements in the US labour market. Building on the encouraging data observed last week will be important. Today we'll be focused on those that are unemployed that are claiming benefits, and so we'll expect that data out this afternoon around 1:30. I'll also be keeping an eye on how value and growth stocks continue to perform. the lower value stocks, the value stocks, stocks that are on lower valuations, have been outperforming those on higher multiples this week. Noticeable change in trend to what we've been seeing in recent years. So that's all from me. I hope you found that informative, and I'll speak to you next time.